So hello my dear students. So after looking at today's question paper, I am very happy because in yesterday's day before exam strategy, I asked you to read only 7 to 8 chapters. I said from those chapters only descriptive questions will come. You can see in today's paper from those chapters only questions have come. No question from TDS, advanced tax, return of income, no question relating to exempted incomes. So I said you to read residential status, heads of income and total income problem and agricultural income. Agricultural income did not come, but all heads and all heads have come and total income problem also came, residential status also came. So I am very happy after looking at towards like today's question paper. First of all, let us see MCQs. For assessment year 25-26 as per Income Tax Act 1961, liability to deduct tax at source under section 193. See, 193 is relating to interest on securities. As per section 193, TDS is required to be deducted either on accrual basis or cash basis, whichever is earlier. That means at the time of entry in books of accounts or at the time of payment, whichever is earlier. So, credit to interest account of payee or the date of payment, whichever is earlier. Answer C is correct. Okay. Next, for assessment year 25-26, deduction under section 80JJAA. I have made separate video on 80JJAA as well. Like I have made a short of Income Tax Act 1961 in respect of employment of new workers. See, generally 80JJAA deduction is available only to those entities for whom tax audit is applicable under section 44AB. So, like this is the answer. Next, PRT Limited, a domestic Indian company, bought back its 10,000 shares from 10 shareholders on 15th November 2024. Original issue price was 110 rupees, buyback price is 300 rupees. This MCQ is relating to buyback concept. In buyback concept, there is an amendment. Before 1st October, there is one treatment. After 1st October, there is another treatment. Okay. So, now when transfer happened, 15th November means after 1st October na? After 1st October 24. So, after 1st October 24, if buyback amount is received, it will be treated as deemed dividend under section 222F and it is taxable under income from other sources. So, this is the answer. Next, Knuckle won 6,000 rupees as lottery prize. What is the amount of TDS on such winning under Income Tax Act 1961? Students, like in TDS chapter we have discussed, if the amount of winning is less than 10,000 rupees, threshold limit is 10,000. Up to 10,000 rupees, no TDS is required to be deducted. Here the amount is 6,000 rupees, which is less than 10,000 rupees. So no TDS is required to be deducted. Are you able to understand? Next. Who from following will be considered as specified employee? In salaries chapter, we have discussed this specified employee concept. Employee come director, an individual who is holding substantial interest in the company, an individual whose salary is greater than 50,000 per annum. Out of these three conditions, if any one of the conditions is satisfied, such individual will be treated as specified employee. So, D part-time director employee. So, he is director plus employee. He will be treated as specified employee. He is holding 15% equity shares and his wife holds 6% of its equity shares. So, total 21% equity shares, and Mr. F, who joined on 1st February 25 and his taxable monetary salary for the year from ABC Private Limited is 50,000 per month. So, like in this, so we can consider A as answer. Next, for previous year 24-25, standard deduction from family pension. This is recent amendment made in Finance Act number 2 of 2024. For family pension, generally what is the exemption? 1/3 of pension or 15,000, whichever is lower. That is under optional tax rates. Under default tax rates, it was increased to 25,000. So, like new tax regime, old tax regime. Under new tax regime 25,000, old tax regime 15,000. So, this will be the answer. Which, like again, this is relating to GST. I think in this C is the answer. His salary is 50,000 per month. That means salary will be 1 lakh, which is greater than 50,000 monetary salary. Like C is the answer in this case, I think. Next, when it comes to questions, I already told you first question is expected from residential status. First question came from residential status only. Okay. So, like he left India, like he came to India on 1st October 24 and left on 31st March 25. First of all, he is British citizen, he is not Indian citizen. So, using basic conditions and additional conditions, you are required to determine the residential status. Like once you determine residential status, you are required to tax income. If he is ROR, all incomes are taxable. If he is RNOR, Indian income plus foreign income from business controlled or profession set up in India. If he is NR, only Indian income is taxable. Salary received in India, anyhow it is taxable. Income of preceding previous year from property in London, received in London. See, last year income remitted in current previous year, this is not taxable. Income from house property in London received in India. The moment it is received in India, it amounts to Indian income and it is taxable for all. Next, profit from business in Nepal controlled from India, which is received in Nepal. This is foreign income from business controlled from India. This type of foreign income is taxable for only, like this type of foreign income is taxable for ROR as well as for RNOR. Property in USA received in London. So this is foreign income taxable only for ROR. Income from house property in India. House property is located in India. Place of accrual India. It amounts to Indian income. Like company deposit in London, 1/3 received in India. That means 1/3 is Indian income. It is taxable for all. 2/3 is foreign income. Simple only. Next, salary. From salaries, I said like definitely one question will come and question has come. Basic salary, anyhow this is fully taxable. First, let us see. He opted out of default tax regime. That means he is paying taxes under optional tax rates. Basic salary fully taxable. Dearness allowance. HRA exemption, you know na, 1013A. Rent paid minus 10% of salary, and he is located in Chennai. So you will consider 50% of salary or actual HRA received, whichever is lower. Wristwatch gift, it is less than 5,000 na, not taxable. Annuity, that is also fully taxable. Next, from house property, I told residential status, heads of income, total income, losses. Question will come and question has come. First, let us see at the end of the question, he opted new default tax regime. See, under default tax regime, income from self-occupied property is always zero because interest on borrowed capital is not allowed for self-occupied property. Let out property you can calculate, you know na, first you will calculate gross annual value, fair rent or municipal rent, whichever is higher, result of step 1 or standard rent, whichever is lower. You will arrive at expected rent, thereby you will calculate gross annual value. Then you will claim municipal taxes and you can calculate income from let out property. Next, this question is relating to PGBP. See, dividend from domestic company, this is taxable under IFOS. Na? Dividend from domestic company is taxable under income from other sources. It should not be credited to P&L account. Agricultural income, that is exempt. That also should not be credited to P&L account. Winning from lotteries, this is taxable under IFOS. That also should not be credited to P&L account. Next, depreciation as per accounts, that is also not allowed. Rent and rates includes GST liability 5600 paid on 5th April. See, this is paid within due date na, allowed as deduction. Salary includes 1200 paid as commission to brother of Ayush. Brother is relative. As per 48, excess payment made to brother not allowed. So market rate 10,000, amount paid 12,000. How much is excess? Excess is 2,000. That is not allowed as deduction. Administrative charges include 30,000 towards medical expenditure for employees due to fire accident in business premises. This is business related expenditure allowed. General expenses include 1500 being penalty paid to GST department for non-compliance of GST provisions, and also include 2500 being donation paid to public charitable trust. See, whatever general expenses are there, it is not allowed as deduction because penalty is not allowed as deduction. Donation given, donation is allowed under 80G. In PGBP, that is not allowed. Depreciation provided in P&L account was based on following information. See, you need to calculate income tax depreciation and you have to claim income tax depreciation. Next, this question is relating to capital gains. Devendra, resident Indian, aged 55 years, held 10,000 shares of Pulse Limited, an Indian listed company, since 1st February 21. Bought for 1500 per share on 1st May 2024. The company announced right shares in the ratio of 1:1. On this date, market price of its share was 1900 per share. Devendra sold 5000 right entitlements. That means what he did, right renouncement. In case of right renouncement, cost is 0. Whatever the amount received on right renouncement is there, it is fully taxable. It is, short-term capital gain. To Mr. Prakash Singh for 500 per right entitlement. Mr. Devendra himself exercised his right for remaining shares on 31st May 24. On the date of exercising this option, market price was 2000 per share. So, like, this is relating to capital gains. Index numbers were also given. You can calculate. But like, next question, this is relating to income from other sources. Mr. Sharad, resident individual, aged 51 years, provides details of following transactions: interest earned on central government securities, taxable under IFOS, token money received for sale of house property. That means forfeiture of advance. As it is happening on or after 1st April 2014, taxable under IFOS. Dividend from cooperative society, taxable under IFOS. Amount withdrawn from unrecognized provident fund, we have discussed. Employer contribution taxable under salaries, employee contribution not taxable. Interest on employer and employee contribution taxable under interest on employee contribution taxable under salaries. Interest on employer contribution taxable under salaries. Interest on employee contribution taxable under other sources. Lottery is taxable under other sources. Purchased from friend jewelry 50,000. Fair market value 85,000. So difference is 35,000, inadequate consideration. Diamond 20,000, fair market value 16,000. So 35 plus 16, 51,000, greater than 50,000. So it is fully taxable. Inadequate consideration 51,000 is fully taxable. Next. Here he asked you to calculate total income and tax liability, assuming he has opted for new default tax regime. Okay. So like under default tax regime, you need to calculate total income. Income from salary already given. Net annual value given. Careful, you need to claim standard deduction. He did not give income from house property, he gave net annual value. income from textile business before providing depreciation as per income tax rules. See, if it is normal depreciation allowed as deduction, but additional depreciation is not allowed. Income from speculative business, long-term capital gain, loss on maintenance of race horses. Directly, this type of loss can be set off only against that type of income. As the type of income is not there, it will be directly carry forward. Loss on gambling, this is dead loss. So loss from speculative business you can set off against income from speculative business, but this is relating to assessment year 21-22. That means previous year 2021 carried forward for 4 years. 21-22, 22-23, 23-24, 24-25. So in current year you can do set off. So you can calculate total income and tax liability. Rajesh, resident individual aged 45 years, furnishes following particulars. So what he asked to again to calculate total income and tax liability. So here under default tax regime, here he asked to calculate under default tax regime as well as optional tax regime, and we need to give advice whichever is beneficial for him. Okay. So in this question only default tax rates. In this question default or optional, whichever is beneficial, that was given. So garment trading business, this is taxable under PGBP. Short term capital gain on transfer of shares on which STT is paid. That means this is short term capital gain under section 111A, and 1st December means what? After 23rd July 24. So tax rate applicable is 20%. In the year 23-24, he had gifted 1 lakh to his son who was aged 10 years. In the same year, the gifted amount was deposited in PQR Private Limited. The company was paying interest. Clubbing provisions are applicable, but at the time of clubbing, 1500 exemption is available. Life insurance premium eligible for deduction under section 80C. Prime Minister Relief Fund eligible for deduction under section 80G. My dear students, only under optional tax rates you can claim 1500 exemption for clubbing, and you can claim 80C, 80G deduction and accordingly calculate tax liability. Under default tax rates you cannot claim 80C, 80G deduction. You can also not claim exemption of 1500. So this is the tax paper. Thank you.